Okay, guys, happy new week. We are now entering the third week in February. This week is CPI. CPI is a high impact news event, so we're going to see some volatility in the market again this week. So, this is my outlook. This is my forecast and analysis for this week, 13th of February to 17th of February 2023. As usual, we're going to start with DXY. Okay, so to the um let's go to the monthly. Let's start from the monthly. Okay, so we have this fair value gap on the monthly time frame. Personally, I think that is the next draw on liquidity. Okay, on the monthly time frame. Okay. So the monthly is pointing to the upside. Obviously, this is a bullish price action. This is a retracement into the range, and we are seeing a rally. It didn't completely fill this fair value gap, but sometimes it doesn't need to. Okay, so let's go to the daily, to the weekly. On the weekly time frame, this right here is a level that I am paying attention to. Let me see if I can zoom in. Okay. So we have this fair value gap. Price has closed above it. Whenever price closes above a premium PDR rate, it is likely going to use it as support to go higher. Whenever price closes below a discount PDR rate, it is likely going to use it as resistance to drop lower. Okay, so here this is a weekly fair value gap, which is a premium PDR rate. Price has closed above it. Okay, so what I'm anticipating now is a drop down to use it as support to launch higher. Okay, so my this high has my attention and this high also has my attention. Ultimately, I think it is going to drop to this level. So this is my long-term draw. On the daily time frame, you will see what I'm trying to show here. Okay, obviously this is also a breaker. Okay, so we're likely going to see a return into the breaker. Let's go to the daily time frame. Okay, so on the daily, we have so last week I mentioned that I wanted to see price use this fair value gap, this one, as support. We rallied up, use it as support, and then we see this reaction. Okay, so we have this down close candle, which is a bullish order block. We might see a return into it, perhaps a drop into it, and then lower. Okay, so that's something like that I would like to see on DXY for this week. Okay, let's go to the so this is that same level that I mentioned on the weekly time frame. We have relative equal highs here. Okay, we have a volume imbalance and we have these short-term highs. So ultimately, I think that these short-term highs are going to be taken, and then this is my eventual. This is the level I think price is eventually going to get to. Okay, so I think we have a reversal already here, because when you have price consolidate and then you have this fake out and aggressive reversal like this, okay, it's typically an indication of a long-term low. Okay, so this we have an intermediate term low here, so perhaps we might drop lower to take out this low, but I wouldn't expect that to happen. The only thing that can make this happen, in my opinion, is if CPI turn out to be bearish for DXY. If CPI is bearish for DXY, then I think we are going to get a drop into this breaker to go higher. Okay, so that means we are going to have an intermediate term low, and that will confirm this level here as a long term low. Okay, so pay attention to this bearish order block, this daily bearish order block, the mean threshold is right here. So, but without CPI, what I'm anticipating is a drop into this um bullish order block to launch higher. Okay, so the opening price of the bullish order block or the mean threshold of it drop into it to continue to the upside. That is my anticipation. Okay, let's go to the 4-hour time frame. So on the 4-hour time frame, this is a 4-hour breaker. If CPI is bearish, this is a level where I think that we're going to drop to go higher. But I'm not expecting this, okay? I'm not expecting that we'll get here. Okay, but if CPI is bearish for there's no way to know what is going to happen with all these high impact news events. CPI, non-farm payroll, FOMC, these events are really crazy and anything can happen. Okay, anything can happen. So that is why I am at least giving room for the possibility that if CPI turns out bearish for DXY, we may see a drop into this breaker because it fell short of it. And whenever price is coming into a level and then fall short of it, I'm always, I'm always suspicious of that kind of price action. Okay, when it comes and then quickly moves away without getting to it, oftentimes it is inducement. Okay, so if we get manipulation during CPI, it could drop here. But without CPI, if CPI is bullish for DXY, this is a level where I would be watching because this is a breaker. This is a 4-hour breaker. I have a low here, a high, a lower low, and price has already above it. So if we are bullish, it shouldn't go back below this breaker. If it goes below this breaker, although the breaker is all of these consecutive up close candles, so it could come into this range to go higher, but preferably I would like to see it not go below this level. Okay, so just drop in here and then rallying to the upside. Let's go to the 1-hour time frame. Now the 1 hour is looking very interesting. We have this breaker, the 4-hour breaker, we have this fair value gap. So perhaps even if CPI is bearish, it might not go all the way down to this level because Monday we might just see price consolidate on Monday and then CPI they use it for manipulation to the downside. Then Wednesday forms a low of the week and then we rally higher. Okay, so I'm bullish on DXY. That is what I'm saying in essence. But because of CPI, I am, you know, trying to create the room or anticipate that we may see a downside retracement. Okay, just for Tuesday. Okay, after CPI, I think we'll find a bottom on Wednesday and then we're going to continue to the upside. 15-minute time frame. So on the 15 minutes, we have price currently inside a 15-minute fair value gap. So if it closes above it on a 15-minute basis and perhaps even close above the daily fair value gap, if you get a close above this daily fair value gap, then it's likely going, this is the low of the daily fair value gap. If you get a close above it, then to use it as support to continue higher. Okay, let me show you the daily fair value gap I'm referring to. Okay, so this is the daily fair value gap. If you get a daily close above it, then we are going to use it as support to launch higher. Okay, so that is what I'm anticipating. This is 15 minutes. We have this new week opening gap here as well. We have this tiny little volume imbalance here. So this is, we have a tone of confluence around here. So I would rather see drop to this level and then to go higher. This is a level I will begin to look for my short setup. When DXY enters this area, I'll start looking for short on EU and GU. Okay, so we have a confluence of multiple areas around here. We have this volume imbalance, we have this 4-hour breaker, we have this 1-hour fair value gap, we have 15-minute fair value gap, and let's go to the 5-minute time frame. And we also have this 5-minute fair value gap as well, and this 5-minute volume imbalance. Okay, so and we have this trend line liquidity here as well. Okay, so that is additional confluence that we could see a drop lower. Okay, we see a drop lower into this level to continue higher. And I'm suspecting that CPI is going to be the manipulation for this week. Okay, so maybe we consolidate around here, maybe we go up a little bit, and then CPI will get that drop down, we form a bottom on Tuesday or Wednesday, and then we rally up for the rest of the week. So that is what I'm anticipating for this week on DXY. Okay, let's go to Euro. Let's check the monthly time frame. So the monthly is still slightly bullish because this up close candle price closed above it. Okay, so naturally what you would expect is that it will use it as support. Okay, but I think we already have a reversal and we are dropping lower into this fair value gap. So this fair value gap is then should be the next draw on liquidity on the monthly time frame. Weekly. So for a while price was trading here, I've been drawing your attention into this up close candle and this fair value gap on the daily time frame, which I will show you. But before I do that, we have this weekly fair value gap. Okay, so this weekly fair value gap price has closed below it. Naturally, what you would expect is that it will use it as support to drop lower. Okay, so that is what I'm anticipating for this week. A rally into this fair value gap that is now forming, and then drop lower to take out this short-term low and perhaps short-term low. Ultimately, I think we are gravitating to this fair value gap. Let's go to the daily time frame. So on the daily, this is that same level the weekly fair value gap I outlined on the weekly time frame. This level. Okay, price has closed below it, so we should see a rally into it and then drop lower. That is what I'm anticipating. My only concern is CPI. Okay, CPI is a high impact news event, and from my experience with high impact news event, those guys can be really crazy. Okay, those they can be really crazy. So if CPI turns out bearish for the dollar, the reason why I'm anticipating a bearish CPI is because it has been bearish for the past few months. The last time CPI was bullish for DXY was back in October, and after that initial bullish price action, there was an immediate reversal, a really crazy and aggressive reversal that completely made the initial drop like nothing. Okay, so and then November was bearish for DXY, September was bearish, January was a little bit of a whipsaw. Okay, the numbers came out to be exactly the same as forecasted. Okay, when the numbers are higher than forecast, it is going to be bullish for DXY. When they are lower than forecast, it is going to be um it is going to be bearish for DXY and bullish for foreign currency. So I'm anticipating that the numbers are likely going to be either exactly the same as forecast or lower than forecast. Okay, so if it is lower than forecast, that would mean that DXY would drop during CPI and EU will see a rally. Okay, so I'm anticipating that the manipulation for this week is likely going to come during CPI. So we'll get a rally to the upside during CPI and then drop down. Okay, that will make a lot of sense. So maybe today we just consolidate around here, small range today, and then CPI tomorrow we see a rally, the manipulation into the upside, and then forms a high towards the end of the day, and then Wednesday forms the high of the week, and we say drop lower to take out this low, and ultimately down into this daily fair value gap. Now, let me quickly use this opportunity to explain the EBITDA look back. Okay, why do I think that price is gravitating towards this level? Okay, now when you have a reference point, okay, a reference turning point in the market, and use that as a reference, and you begin to count back, you begin to count back you begin to count back 20 bars, okay, or 20 days to the left, 40 days to the left, and 60 days to the left. Okay, so this is 20 days to the left, this is 40 days, this is 60 days. The intermediate term draw on liquidity is going to be the 20-day draw. The short term draw is going to be the short term draw on liquidity is going to be 20-day low inside of that 20-day look back. The short term low inside of that 20-day look back, and the intermediate term draw is going to be the short term low inside of that 40-day look back, and the long term draw liquidity is going to be the low or any PD array like this fair value gap inside the 60-day look back. Okay, so that is why I think that this is where price is coming to eventually. We also have a market maker sell model, initial consolidation, run to a level of resistance, key high, smart money reversal. I'm seeing this rally into this level as low risk sell, and then we'll see accumulation, distribution, redistribution, which may sometimes turn into reaccumulation. Okay, but ultimately I think that we are going to clean these lows. Okay, I think we are going to clean these lows eventually. All right, so that's my forecast for the year. I'm already giving my forecast for the year. I think we are going to drop lower into this other block. Okay, clean these lows into this other block, and then we see reversal. Maybe I'm getting a little bit ahead of myself, perhaps, but that is what I am anticipating going into the rest of the year. So for this week, a rally manipulation during CPI, and then drop down to take out this low, and perhaps these two short-term lows if you get a big range. Okay, but at the very least, this short-term low. Okay, let's go to the 4-hour time frame. So on the 4-hour time frame, we have seen a break in market structure. We have a high, a low, a higher high, lower low, and we have also seen a break below an intermediate term low. This is an intermediate term low. This is a short term low. This is a short term low. When a short term low has two short term lows to the left and right of it, that low in between is an intermediate term low. So significant shift in market structure is when price closes below an intermediate term low, and we have seen a close below it here. So perhaps we get a return into this 4-hour breaker, rally into it, then drop down. That is my anticipation into this level for this week. Okay, so 1-hour time frame. On the 1 hour, time frame, price has taken liquidity. We've seen a drop down below an intermediate term low here. We have a breakaway gap here. So I'm anticipating we are still inside a daily fair value gap. This is the low of a daily fair value gap. So perhaps we just consolidate, drop lower to fill the rest of the daily fair value gap, close below it, and then perhaps on Wednesday we form the low of the week, and then we rally, we I mean we form the high of the week around this level and then we drop down. Okay, so my anticipation is that CPI is likely going to be bullish for EUGU. Okay, so if we can consolidate around here um for the rest of today, Monday, I will have a range. Okay, then we have CPI, big rally to the upside and then rejection from there. So the manipulation for this week is what I'm anticipating as CPI, maybe upside manipulation, which will set up the Judas swing for the week and then drop down to take out this low. Okay, that is what I'm anticipating. Okay, so something like this, a drop lower to fill the rest of the daily fair value gap. It would be nice if we can get a close below it. Okay, and then we see consolidation rallying to around this level and then into this breaker to say market structure shifts to drop lower into this level. Okay, so that is what I would like to see on EU, something like this. That's what I would like to see. Now, CPI can be really crazy. Okay, CPI is a really crazy CPI is a really crazy event. Okay, so if it turns out really bullish for EU and GU, we could see this high taking. Okay, so this is also definitely a possibility. We might get a return to this level to drop higher, but ultimately I think this high is now a long-term high on the 1 hour time frame. Okay, why is it a long-term high? Because we have an intermediate term high to the left and right of it. Okay, why is this an intermediate term high? Because we have a short-term low here, a short-term low here, and even if you want to use this one, I have a short-term high, sorry, not low, short-term high here, short-term high here. So this is an intermediate term high. This is also an intermediate term high. Okay, all these highs I have here, I have a small little indicator that I created to mark out the short-term highs and the short-term lows. Okay, so if I enable the short-term lows, this is a short-term low. Okay, short-term, why am I confusing the two? Short-term high, intermediate term high, short-term high, short-term high, intermediate term high. So when we have a high in between two short-term highs, that becomes an intermediate term high. Okay, and when we have an intermediate term high in between two intermediate term highs, the high becomes a long-term high. So this is a long-term high. You can see a long-term high forming inside of a volume imbalance. Okay, so this is what I am anticipating for this week, but because of without CPI, I would not expect price to go above this level. But because CPI, they can really be very crazy. This high impact news event, CPI, FOMC, non-farm payroll, they can be really crazy. So I am giving the room that if you get a really big rally in CPI, this is the highest I would like to see price go to. That is the highest. Okay, I would rather see price go to. And that high is also the opening price for, is it the opening price? Um, yes, I think this is opening price. No, it's not the opening price. Okay, but that is the highest I would like to see price going to. That is the highest. If I'm still going to maintain my bearish stance, that is the highest I want to see price get into. Maybe use this as liquidity for a 3 tap setup and then drop lower. Okay, so that's that for EU. Let's go to the low. Okay, let's go to the low time frame and see what is going on there. Let me get rid of this. So we have a market maker sell model that has just been complete. So I'm anticipating that we will get another market maker sell model consolidation around here, run away, forms a key high, then smart money reversal around here or around here because of CPI. If we get a big rally on CPI, okay, then drop lower. um Last week I missed this short. Okay, my plan was to go short here. Okay, I posted it on my Telegram channel when we got this rally. I mentioned I wanted to see a rally into the volume imbalance. I could drive higher into it, and then from there I'll look for shorts to target this breaker, okay, this level, and we see it playing out almost to the tick. Okay, that is 3 weeks in a row now of predicting the price action of EU. All right, so for let's go to the 5 minutes to see what is going on there. So this is the breaker, this is the 1 hour breaker, and we have the 4 hour breaker around here as well. So perhaps we see some consolidation, fill the rest of the fair value gap. Tuesday, CPI, big rally, manipulation to the upside to this level. Or if it is really big, maximum this level, as that will be my validation level for bearish price action. So for Monday going into Tuesday, I'll be looking to see if I can get a long around this area to target this level. I'll take 95% off, okay, around this level. Now watch to see if I can get a short setup around here to target the low that I mentioned on the higher time frame. Okay, so that's that. That's my expectation for EU. Let's check GU. It's going to be similar. Okay, it's going to be similar. Let's go to the weekly. So just like EU, we have closed below this weekly fair value gap. So that was last week. We closed below it, and you can see price rallied up, used it as resistance to drop lower. Okay, so for this week, I'm anticipating expansion to the downside. Okay, the only thing, my only concern again is CPI. Okay, if CPI turns out really bearish for the dollar, then we could see a rally into this fair value gap to drop lower. But I don't want to see that. I'd rather see this level remain open. Let's check the daily. So on the daily, this is the gap. You can see last week price rallied up, use it as a resistance, and we drop lower. So I'm anticipating a continuous drop down into this level, okay, as my long-term draw. So similar to EU, as I explained, when we have an anchor point, if I use this as my anchor point, the short-term draw is this level, the intermediate term draw is this fair value gap, okay. I mean the long-term draw will be this low. Okay, this is also is so I'm anticipating a market maker sell model, initial consolidation, drop down to support, kilo, then smart money reversal to eventually come back to take out this high. Okay, so for my long-term expectation, I'm anticipating something like this, something like this. Let me get rid of this. That's my long-term expectation. Okay, and then perhaps we then see smart money reversal to eventually take out this high. That's my expectation for the year. It might take out this low as well, but this could be the turning point. Okay, this could be the turning point. All right. So I think we have started the bearish price action for this year already. Let's check the 4-hour time frame. On the 4-hour, we have this 4-hour fair value gap here. So we have this 4-hour fair value gap. We have this breaker. Why is it a breaker? This is a short-term low. This is a short-term high. Price has rallied, taken the high and dropped and closed below it. Okay. Another thing to also pay attention to is this right here. Okay. So something to pay attention to. The market is likely going to rally into this area and then reject to the downside. We have a breaker here. We have a bearish order block here as well, and we have this fair value gap, which is now a balanced price range. So let's go to the 1 hour. So this is that BPR. So I'm looking to see if we just consolidate around here on Monday, then Tuesday we say rally into this area, something like this. Into this area. I like to see this level remain as a breakaway gap. It could tap slightly into it, but I'd rather see remain open. And then we see a shift in market structure to run these lows into this level. Okay, so that's what I want to see for this week on GU. Let's check the 15-minute time frame. Let me get rid of this. So we also have a market maker sell model. This is a market maker sell model. This is initial consolidation. We also have a sell model inside a bigger sell model. The sell model here, initial consolidation, which has been completed already. This is the bigger market maker sell model. This is the low. That should be a terminus. So I am looking to see if we consolidate on Monday, rally into this area on Tuesday during CPI. If CPI is really bullish, then these relative equal highs is likely going to be taken. Okay, because this is definitely another possibility. If CPI is bearish for the dollar and bullish for EU, we might get we could get a sweep of that high for the manipulation, and then where is it? We could get something like this into this level, then we drop lower for the rest of the week. So this is definitely a possibility with CPI. Okay, with CPI, this is definitely a possibility. Okay, with CPI, okay, if CPI turns out bullish, I would anticipate that, okay, this high will be taken. The highest I want to see it go is this level, but I would rather not even see rally into this area. To be honest with you, I would rather see drop around here. Okay, but with CPI, with high impact news event, anything is possible. Okay, anything can happen with high impact news events. Okay, so without CPI, this is where I would rather see price reject from. Okay, this level That is where I would rather see price reject from. But let's see what happens going into the week. This is pay attention to the 1.1960 level as well. So on the 5 minute, let's see if there is anything of interest. So at the moment, we have these relative equal highs. That relative equal highs here. We have price consolidating. So if we get a shift in market structure, we get a close above this level, into this level, we could reject here, and if CPI is bullish, we could get a rally up to this level before it's up into this equal high, rather, before it rejects. Okay, so this equal high, we might get a rally into that level during CPI. Okay, and CPI forms the high of the week on Tuesday or Wednesday, and then we drop lower for the rest of the week. Okay, so that is my expectation for this week. US 500, we have this daily fair value gap. Okay, so for US 500, I'm also expecting lower prices rallying to this level and then drop down for the rest of the week. That is my expectation for US 500. I don't actively trade US 500, but eventually this is a market that I'm going to be trading actively. All right, so that is that. If you have any question, feel free to drop it in the comment section or drop it on the Telegram channel. Okay, I'll see you guys in the next video.